Hello guys, glad to have you on board again. Today, this is beginner's level, so everyone can somehow watch this podcast, but experienced traders shouldn't nearly give a shit because most of what's going to be tell and said in here is mostly known for you guys. So anyway, let's move forward. So the topic in here is still to try to highlight the usual and typical low risk range trades and trying to put you ahead of eventually here and there some little bit more risk taking on some for some examples on some trending ranges context. But as a quick introduction, still remember that the core elements you need to really understand is that, yes, I know lots of you guys want to trade trends. I know you think trends are the things you need to master to be profitable in trading. Now, let me tell you something. Yes, out of the experience I had on trading and out of the experience I've had from all the traders I've been talking with, the thing is, we all get to the same conclusions. People fail because they follow the goddamn wrong path, and they still do the same old mistakes. So at some point, just ask yourselves, following the trend is well known. It's broad-based analysis way of trading. So why do you think people are failing 80% simply because they follow the broad-based analysis? So if they tell you to trade trends and to avoid trading ranges, you should probably do the opposite. That's just simple way of putting things together. So we all got to the same conclusion. When you talk to experienced traders, we all got to the same conclusion. It's actually when we decided not to follow the path as the usual path as, then we actually ended up walking in the right direction. And we all follow the same path. No matter how hard you try to put it, we all started trading ranges. And that's the first thing we actually got to master. So easy trades are not trend trades, they are range trades. I know this might sound stupid because most people just think about the market as searching for swing trades and swings and reversals and stuff like that and profiting from the way the market can be trending. Yes, you can profit from trends, but mostly because you are trading a range and you just let it open a part of those trades for further targets. It's more than that. It's actually this. Go for breakout trades, and I don't know a single breakout trader who can be profitable. Not a single one. I've seen lots of beginners taking breakout trades. I've seen lots of them in the broken because someday they ended up making a stupid mistake like over leveraging, or even unconscious mistake, like, I don't know, someday you take the trade and you don't care, you don't have a look, you just make a tiny mistake, all right? Like, you should be taking 10 lots, and instead of that you're taking 100 and you don't even figure it out. Like, you take the trade and you move to something else, and then you come over the day right after and you figured out that 40% of your account just disappeared simply because the trade went wrong and you misunderstood, and you just made a tiny mistake with the position sizing. And believe me, I have quite some examples of people whom this thing happened. So always remember that the easy solutions are are generally the wrong way to go, and they're just false friends. So anyway, that being said, I hope you guys understand that more than anything else. Start safe, take safe trades, limit the amounts you're not there to make money. The range trades are just consistent way of bringing a little bit of money, and you need to master those trades, because when you master them, you can play them. They don't take that much of your margin because these are tiny position sizings, but they bring a little bit of money consistently, so they can pay for your mistakes. Though you're gonna make mistakes, like I said, one day for God knows what reason you're gonna take 100 lots out of instead of 10, or you're gonna take 10 lots instead of 1. Just a stupid mistake, and you won't even figure it out. It will turn out wrong. But at this given time, you're going to surrender some gains instead of losing money, which means all those tiny gains will pay for the big mistakes you'll make a little once in a while. But those mistakes, you'll get through them because everyone had at some point. And you can't just think you're not going to get through this. We all get through those stupid mistakes. Things you can I would barely say we can't avoid them. Every professional trader get into those traps. Mistakes or a lack of attention, all those tiny stupid stuff that you can do, and I still do them. I mean, just over last year, I've been losing $3,000 on a single trade just because, all right, stupid mistake out of the position sizing, executing 3 full lots of VIX instead of 30. So it was just like of 0.30, so it was like 10 times the leverage. Just the spread costed me $3,000. Like getting in, getting out of the position instantly, 3,000. Now, I mean, that's how it is. All right, these stupid mistakes still happened. All right, and they can be quite significantly painful, but still, do you really think you can avoid that? You're not a perfect person, and these things will always happen. So the range trades are the one that will give you the sustainable basis to start taking a little bit more risk without risking your initial capital. Because those tiny gains, you'll eventually lose them in some mistakes, but at least the mistakes will teach you something, and what you'll lose to get to that lesson is just previous gains. And you really need to make that difference. Losing gains is definitely not bad. You're teaching something, you're taught something, so you're learning, you're progressing by making mistakes, and those mistakes, instead of costing you capital, just cost you previous gains. And if you can understand that this is positive anyway, then you're really making it good. Because at the beginning, if you think about making money, you just get it all wrong. You're not here to make money. Think about study. You're there to study something that is pretty goddamn hard. And if you think you want to be paid within your studies, then you're really making it wrong. Think about investing in time. The best in here is that if you can make a little bit of money, then that's really great, but that shouldn't nearly be the first goal. First goal in here is to make fucking mistakes and learn from them to avoid repeating them all over again. Because we all ended up in the usual traps. I mean, you know, when I'm talking with another professional and I can tell you, all right, someday I've been doing this, what do you think the person in front of me just tells me? Oh, yeah, me as well. I remember this one. We all got the same stories. We all got into the same traps. So you will probably as well fall into those traps. Just make sure you've been having spared money for them. So just a little bit of gains to pay for the stupid mistakes. And learn not to repeat the stupid mistakes. But you mostly will have to do it at least once. So yes, falling into traps is part of the game. If you fear falling into traps, just don't even get into trading. You will obviously follow those traps because we all have. As simple as that. Anyway, that was just a quick introduction. I'll stop talking and get into trading right away. So what I've been doing in here, and that's the first time I'll do, I'm showing you beta versions of the indicator. Normally when I make those podcasts, I always use the last available version, so you and I have the same stuff to work with. Today is not going to be the case. I'm using the beta version simply because it eases the process for me to highlight trades that you guys will matter of. So this is how the next version of the indicator will eventually work. You'll get some assistance, some way to highlight the previous potential trades. These definitely are not signals. Remember that anyway, you need to risk manage with the momentum, and I cannot even imagine coupling those two indicators within TradingView. They're too complex, and TradingView will simply not even compile them. So here is just price filtering out of a potential algorithmically detected context. So remember that that sentence might not mean a lot to you. It means a lot anyway. Algorithmic detection means there will be false signals and there will be signals not detected. That's the gambling thing in here. We can't do any perfect stuff with algorithms. No matter how hard I tried and how complex the algorithm can be, it never will be perfect. So if you think you can blindly get into those trades, you really get it wrong. It's right here for one single reason, the alert system. Which means the alert system will change, and will change to something that I think is easier than the current way it was, which means right now you basically set alerts depending on the levels of experience you've got. Which means in here, all you've got, those yellow signals are signals for intermediate level traders. These are bearish range signals. All right. So as in here for the example on the SPX, it's been detecting this bearish range trade, this one as well, this one. Remember the rules, right? Still applying the goddamn paper rules, right? It's 61% retracement being in context plus a signal and a trade. Remember that you always need to verify those trade, all right? Which means bearish range context needs to have early bearish detection trades, detection momentums. So in here, bearish momentum, which is a red fucking signal. So in here is definitely a bearish range context. In here, divergence, same thing, perfect. In this one, taking profit. So it's a reversal signal. It's not necessarily an early trending, but still that's great. That means the bulls are profit taking, so it's pretty great. All right, it's exactly the kind of signals we're looking forward for in here. Bulls are taking profit without breaking a single resistance, so probably bearish. All right, so in here is exactly what the kind of stuff we're looking forward for. All right, so we're still in a bearish trending context with the SPX. So this is the kind of stuff you need to learn. This is the kind of trade I shared with you guys yesterday. Right? I told you yesterday into Discord for experienced traders. That's exactly what I do. All right, let me just pick up Discord. All right, this is exactly what the kind of notification. So this is for intermediate traders. All right, though less experienced traders will either wait for 76% or take the lowest position sizing. All right, it's the same old stuff. So as we do in here for beginners, which means whites and green people, all right, you can get into those trades, into the yellow trades, but you make sure you take the lowest possible leverage. All right, this is a bearish trending ranges, so this is for experienced traders, or at least intermediate levels. So I told you, for example, still nothing at the moment. Closely looking at the current areas, if we can see there's some trending momentum signals to take a bearish range trade. Otherwise, blah, 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 blah. Though the typical thing, bearish range trade. So I told you prior then triggering the signal, watch out for the 61% retracement, stuff like that. All right, so yeah, I know there wasn't that much trading signals recently, simply because the market was just drying out of informations, and now we've got things to trade. So yesterday was a perfect trade. Took it. I mean, I gave you the trade. You think I didn't take it? So now I've got these tiny reinforcements, and I'm fine with that. We're probably going to reach out validation sooner or later, I think probably by this morning. So maybe in a couple hours, we're probably going to reach out to the trend channel, which means trend validation. The trade confirmation for trending ranges is slightly different than the usual neutral range trade that you must be familiar with. The simple difference is that instead of risk managing out of 50% trend channel, a context channel, we'll generally tend to confirm when the market reaches out to the opposite trend channel, or the opposite context channel. So it's getting in here, all right? This is where this thing will happen. So it's going in there that you consider the trade to be confirmed, and generally the targets for those trending ranges is below the previous low, right? In a bearish trending range, we always break the previous support, which means the target is closing below 28.56. All right, so anywhere below in this area and below the context. So closing below 28.56 and below the context with a reversal signal is normally the kind of trading profit of targets you will profit take on this trade. So if I sum up the informations, remember the difference is you can trade whatever the fuck you think is going to happen because you think a trend will trigger or whatever. This is not trading, or at least this is guessing kind of trading. So it can be done when you're very experienced, certainly not if you're just getting into trading. So avoid gut decision. I know it may sound stupid to say, all right, why the hell am I taking this trade just because this guy just told me a bearish range or whatever? Yes, maybe you should do it because at least this thing teaches you something. It teaches you how to master a pattern. Call it however the fuck you want in the future. If you don't like bearish trending range or whatever, just call that any different. It's just at least learn the structure I'm sharing with you guys. These structures, I've been trading them for years, so I master them. You don't, so learn how to master them as well. You'll make them personal through time. I give you a frame to work with. And then you do whatever the fuck you want with that. If you don't like my rules, or if you think you can get better rules, then switch to your rules. But at least understand that this is how things works. Using patterns that you can master at least, and trade it enough to Be confident when they show up. You don't overthink things, all right? When I see those structures, I recognize them, I trade them, eyes fucking closed. Is this going to work or not? I don't nearly know. And do you really think I care? I don't care. All I care is for this fucking trade to reach out validation, so I take a tiny risk afterwards. Because the initial risk is the size of the trend channel, so it's a significant sizey stop loss. As we reach out to the trend channel, this stop loss is freakingly narrow. So now I'm taking a little bit of risk. Once I reach out to the trend channel, the risk is pretty much close to zero. It's not zero. It's still like 0.3% or something like that, but that's nearly close to nothing to me. I don't nearly give a shit. A 0.3% loss is like, if you really care about that, then you really need to stop trading. So losing is part of the game. You can lose tiny bits of trades, lots of time. It's not really the point, all right? The point is, as always, stop thinking about winning and losing trades. Just stop thinking smart, because the smart money doesn't nearly think about that. The smart money just thinks about how positive the overall long-term returns can be. Can you be profitable for how much risk you take, and how do you handle those risks is really how smart money think about things. You can make quite a lot of money out of risky assets. Yeah, that's great. But do you really want to put all your equity into this? Definitely not. The risky trades are meant for partial portions of the capital. So tiny risk-taking on risky trades. That's how it goes. Manage the fucking range, the fucking risk. The riskier the trade, the lower the risk you take on this trade. All right? The capital risk. So you invest a little portion of your money into them. Otherwise, you just don't get it, all right? Yeah, risky trades can bring a lot of money. And if you want to put 30% of your capital in them, then you're not trading, you're betting. And you rather like to go betting to the closest bar. That's fine. At least you'll be able to figure out that you're really gambling. Or go to the casino, all right? Casinos are meant to gambling. So if you want to gamble, go casino. Suddenly don't go to the markets. This is the easiest way for you to lose your money. All right, it's even more dangerous than going into casinos. All right, because like I said, casino is pretty much 50-50. Either you're going to be lucky or unlucky. Obviously, house always gets the money in the long run. So the more you play, the more you lose. Though it's not 50-50. It's more like a 49-51. Right. But anyway, you know that trading, those numbers are even worse. It's like 80-20, 80 fucking % losers. So why the hell would you go down these roads? If you really want to gamble, don't gamble in the market. Go gamble in a fucking casino. At least you'll have you'll have much better odds to lose less. That's the point, all right? People are attracted by trading because they think this is where they're going to make shit ton of money. The reality is that most of them end up either broken or losing money when they quit. So that's not necessarily what you guys want to do, all right? So think smart, once again, is really important. Those who make stupid decisions in trading generally don't last very long. Anyway, as you can see, we've got a breakout target right here. So you really want to risk manage in this area. I think, anyway, is going to be a risk limitation. I personally will just put my stop out of the market top. All right, it's just a tiny reinforcement I've been taking. So those of you who are getting in, you know how to risk manage. That's the usual stuff, right? But learn how to identify those patterns. So these ones are a little bit risky for beginners. Remember that these trades are generally meant for intermediate levels. But in some specific cases, I share those trades with you guys. And yesterday I gave you this trade prior than the signal, right? It's important. If you see a trader that just explain whatever happened afterwards, it's simply just not how it works. A trader is always anticipating the next move, so it's important to always have the signal prior than the trade. So I told you I'll take the trade in this area for this and this and this and this reason if I get this and this and this and these kinds of signals. So that's how trading works, right? Knowing what you will do if things show up, and if they do, you already know what you're going to be doing. You're never reacting. You're always one step ahead of what you'll eventually be doing. It's important for you to see it that way. So I told you okay for a trending range. I told you okay for beginners, but either you wait for 76 or you take a tiny position sizing. All right. So anyway, today we're going to take other examples. We're going to switch to whatever. Let's just move on and do something different than I've done with the French users. Let's go 4 hour. I'm just going to scroll through time frames and assets because that's what you guys need to do, right? To highlight ranging structures. All right, in here, there could have been one. I don't know why the fuck it didn't trigger the reversal in here. That's odd. It should have been reversing the context in here. I'll have to study this one. I'll just put a reminder for me. So it's NZD GPY 4 hour context messing. All right. Remember, this is still beta version, so there's still a lot of stuff not working properly. All right, I'm working on it. So that's the goal of backtesting and stuff like that. So there's still a lot of work to do. Probably I'll release that in a couple weeks, but I'm working on this one anyway. So in here, context should have been reversed. All right, it still isn't, which means if it had, we would have had a support context heading into this directions, which means in here we very likely would have had, god damn it, a range trade, typical range trade, bottom to top, 76%, bam, in here, range trade is definitely something you could have been taking. All right, so that's just one of the many examples of trades you should highlight. In here you've got no risk limitation, so damn it, wrong button, wrong, not enough information to get into this trade. You still had a pretty decent divergence actually. We haven't making new lows, but still it would have been better to have it detected. So I would say not even a triangle, but there could be no triangle in here because the context hasn't reversed. But let's see, because if you understand, even if in here indicators haven't been applied the way they should, all right, that doesn't mean you couldn't take the trade anyway. Because in here, just take 1 hour. And you probably have the trade in here anyway. Let's wait for it. All right. So, did we get to take the trade? 76. Bam. In here, you could have taken the trade. You weren't below the context, which means in here normally we should have been, which is weird anyway. But you had a bearish trending, a bullish trending range in here, opportunity. So as you can see, bullish signals in this area is the kind of trade you could have taken. So you would probably have missed the trade on the 4-hour context because in here there is a mistake on the context analysis. All right, this is something I'll fix, obviously. But anyway, as you missed the trade on the 4-hour time frame, you could have found it in the 1 hour. So learn to scroll the time frames, because what's important is not to force things up. It's just to figure out that it can be possible to do the same thing into multiple time frames. And this is exactly what you need to understand. The appropriate time frame for a trade is the one that gives you a risk limitation. It's just simple as that. There are many ways to take the same trade and to profit from the same market move. Like, for example, to profit from this market move, you could have been taking, example, a tiny range trade probably in here into very short time frames, or you could just be profiting from this from a very wide trade you would have been taking on a broader time frame. So multiple options to profit from a single price area. So don't try to say, how could I have been profiting from this? Though this is how you see market. I remember how I was thinking back then. You see this and you say, oh, that's great, people are making money in here. How could I have been anticipating this area? Oh man, an exit signal on the market top. Bam, those indicators are great. No way. Yeah, you had an exit, but could you even trade this area? No, you couldn't. So you wouldn't even have traded this area. Because that's not the point. You're not looking at finding the perfect reversals. This is not how you teach trading to people. And that's definitely not how trading itself works. It's just about figuring out decent context into decent time frames to risk manage. The goal is not to find this area. The goal is to find a trade in which you can enter eventually in here. You're not going to pick the market top. But as getting in here, your stop loss will be set there. Right? Your risk limit in here as you reach out to the trend channel, and you'll be profit taken in there, for example. That's what trading is about. It's not about catching the perfect top. It's about getting into an area in which you're less likely to be hit by a stop loss rather than validated and confirmed and profit taking and whatever. This is all trading is about. Just this. Simple as that. Obviously, the wider the stop loss, the lower riskier the trade is. All right? That's why range trades has large stop losses, though you can leave a lot of room for chaos, because it's important. Chaos, range is all about chaos. So you just limit you limit the risk, you let some room for chaos, and most of the time you'll be profit taking. That's as simple as that. You're risking significant amount of stop loss sizing. So like I said, you're generally risking 1 to get 1.5. So it still remains positive as long as you get 50% return. 50% success rate is more than enough to get profitable long-term returns over range trades. And the goal in here is that range trades is pretty easy. The rules are simple. It's definitely not the case about trend trades. Trend trades are much more complicated to figure out, even though some people will tend to make you believe that trends is where you make money into trading. Yes, it's where things are easy. All right? It's when things are easy to explain, for people to understand, but this is not what they need to understand. You never need to understand a goddamn thing into trading. Trade the ranges, and you'll profit from the trends naturally. All right? You want to trade a trend, then try speculating on the previous range, and just let go with 50% of the position sizing, and you'll profit from the trend without risk taking. And you can reinforce in this trend if you want to, but that's something you'll learn to do in the process. You don't do breakout trades as you're a beginner. It's the worst possible thing you'll do. I don't know a single breakout trader who's been making it out there. Not a single one. There are some breakout strategies from professional traders and experienced traders, but definitely not the core of their strategy. Breakout trading is just a reinforcement, which means you should already be in when you're breakout trading. All right. Anyway, that was just something to say, to set aside. So, moving on, let's have a look at cryptos. Actually, I haven't been looking at what happened yesterday. Yeah, we've done what I wanted. So we went up to weekly tops. All right, that's great. So if you took the breakout trade yesterday, I personally chose not to do it. Then normally you should have been profit taken in this area to risk manage. I think 180. So remember the trading scenario was you had a mature range. What the fuck is happening in here? Give me a second. What the hell? Something really goes wrong in here. It should be detected. This signal should be green. So give me a second. Another problem. Damn it. ETHUSD. You can see a lot of work to do. It's 1 hour. These are range trades. Issue. Square signals. All right. So pure and simply, when you've got this is generally the type of stuff I detect. All right. It basically tells you one thing. All right. When you've got two opposite square signal, you know that normally the range is mature, and you can generally highlight a structure from this range. All right. So in here it was pretty hard. So I told you probably don't overestimate stuff and go for this, like a flat triangle and stuff like that. So I told you there's a breakout trade here to take for those who want to. All right. Like you get in here. There, you put a stop loss below the low, and you profit take at 1-to-1 ratio. Right? Simple as that. So it was getting in here yesterday. I put in my alert in here. So I got the alert triggered. I just decided not to take it. But it was, if my memory's right, yeah, in here. Damn it. Yeah, 172 when I got the alert. We were still trading these prices. I decided not to take the trade. But you could have got in here, profit taken here. And put the stop loss below, and right now you would have a free trade. But like I told you, I think we're going to pull back and get to new lows afterwards. So this is the next trade I'm caring about, not this one. But I wanted the market to go in here and test this price area. I also tend to believe we've got a bearish move to come and probably breaking down this low. So this is the area I care about. Now I'm going to update, by the way. Right, so I'm looking for a buy trade below the context, still waiting for stuff to happen. You might have different context in here. Like I said, I'm working on it, so it's beta version. Don't take it for granted. Definitely not. All right, really important for you guys to understand that. It's really, really, really important. Bitcoins, let's have a look at them. All right, still hesitating as well. We're trying to rebalance in here. context is now reversed. That's great, but I don't think we can be a lot more bullish in here. I think we're very likely gonna go to this area. Remember what we've told, right? Anytime we go below context and we've got signals, you need to risk limit for bear trades. All right, if you have a bullish bias on cryptos, then now it says, all right, have a look at 7.5K. If you have bullish reversal signals below the context, you can eventually try to take them. All right. Otherwise, you wait for a supportive area where there is volume. All right, 7.2, 7.1. These are the area where you can try to take speculative reversal trades. Remember, these are speculative. If you want to go buy and hold in here, it's definitely not the appropriate timing. Remember that the buy and hold area is in here, 6.5 to 4.5K. All right, certainly not the 7 to 7K area. All right, but still there can be some reversals in here without problems, because we'll get into the 4-hour context. All right. Alright, so remember that anytime we slip below the 4-hour context, or below 7.5K, is where we can find some supportive areas, right? So it still remains dangerous to trade in here, so don't take that as granted stuff, but normally in here below the context is where you want to support prices, alright? You're going to need the risk limitations, alright? And as you can see in here, just have a look at the sine wave. It might be on the verge for a breakout. So if we go down this road, you can't trade reversals. Remember, you just can't. You're beginners. But experienced traders in here will look for reversals, will look for breakout targets and stuff like that. Right? You unexperienced traders, you don't try to catch the dip. That's really important for you to figure this one out. All right? It's really important. Don't go into reversal trades. When you identify potential reversals, what do? Think for a bit. Instead of trying that reversal, wait for the reversals lower time frame range to build. All right, we want a 4-hour reversal, so wait for a 1-hour context range. You wait for this to finalize its move, to find the final excess, and you wait for the moment the market will go support context to resistance context. All right, and you'll try catching the third range boundary. For example, that's the kind of stuff you would like to do, right? Trying to catch this trade, this one, instead of trying to catch the reversal. This is for experienced traders. This is far less risky, because in here you have a usual size. All right, you'll be able to apply your same old rule. You'll take the trend channel sizing. That will help you size the stop loss to find an appropriate risk managing. In here you'll have your risk limitation, confirmation stuff, and whatever. You can apply the rules you know and master. That's the difference. In here is something you don't master. In here is something you know how to deal with. Though you will always be better at using something you master. And if you can understand that, and you understand that, you don't move to riskier trades unless you master them. Master these easy trades, and then you can learn riskier trades, like try trading accumulations, pullbacks, try to accumulate reversals, try to add reversals trades and stuff like that as you keep on learning the market. And at the end, you'll be able to trade multiple contexts. You'll be able to trade every range conditions. Like you can start trading mature range as you get more experienced, all right? But as you're still a beginner, you just got one trade in a range to take, the third range boundary. That's it. Point. Then as you get a little bit better, you can trade a little bit more aggressive trades like trending ranges, and then you'll start learning a little bits of trades. Like I said, you're going to be taught to make accumulation trades, pullback trades. You're going to start trading early reversal trades as you get even more experienced. You're going to start trading breakouts, and you'll have so many contexts to profit from, much more price movements to profit from. But you'll also be able to filter out the false signals, because more risk means a lot more false signals, though you need experience to filter them out. All right? So that being said, I think it's going to be enough for today. Moreover, because I've got plenty of job to take care of, plenty of work to take care of, because lots of bugs I need to figure out. I'll release the MCQ test probably later today. depending on how much people have been answering. Eventually we'll try to make a correction tomorrow as educational content video, or eventually just next week. I just don't know, but I'll release it probably right after publishing those 2 podcasts today. So I suggest you guys answer the MCQ test ASAP. Today would be the best case scenario, so it still be a fresh information in your brain, so we can make the correction right by tomorrow. So you still remember those answers you've made, why you made them. So it would be great to make the correction by tomorrow. So I'll just advise on whether or not I've got sufficient participations into the MCQ test to correct them tomorrow. So you'll find them into Discord. I'm probably going to put a link as well into Twitter, but remember Twitter is most for French users. So anyway, you'll find the links into Discord. All right. Bye, guys.